I've been involved in the capital markets since a very young age. I grew up on a small farm in Iowa, which is a small state in the Midwest, and I was in charge of hedging our one corn contract, and I've basically traded commodities all my life. When I came to Wall Street to trade government bonds for E.F. Hutton, the bid-ask spread on the long-term 30-year bond was a half a point. To put that into perspective, that would be in Bitcoin, that would be a bid-ask spread of $320. So it was very early on. It was all voice trading. It was an over-the-counter market where you'd pick up the telephone and call another dealer. I was with E.F. Hutton, or there were several brokers at the time. And one night on Wall Street, I happened to become friends with a guy named Bernie Cantor. And Bernie Cantor had this idea that he was going to put bond prices on a screen and be able to trade them electronically. I said, that's a good idea. I'll take one of those screens. So Monday morning, a technician came in and brought a television screen that's about as big as that thing, whatever that stair step is. So it was a gigantic screen. If there had been an earthquake, I would have died. And at the end of the day, I turned in my blotters to my boss, and he's looking at my trades, and he goes, "What's this?" I go, "Well, there's a new broker that's trading electronically. That's this big screen here, and I saved $85,000 by using this screen." And he goes, "We at E.F. Hutton do not put our prices out of the screen. Come with me." So I go back to his office, and he's blasting me for trading on this new system. And then he said, "How much did you save?" I go, $85,000. The next week, he had a screen on his desk. So that was very early on. As I mentioned this morning, I saw financial futures very early in the marketplace. That was a crazy idea, like Bitcoin. The fact that we needed futures contracts and derivatives on the largest commodity of all, money, seemed like a crazy idea. I got thrown out of some of the finest banks in New York and Chicago trying to explain to them how they could use financial futures to hedge their interest rate risk. So this is very early times. I believe that the march to efficient markets will continue. I was schooled at the University of Chicago. I was going to night school at the University of Chicago and trading on the floor of the Chicago Board of Trade. But at night, I'd be listening to these Nobel laureates talk about the efficient market theory. And I used to sit in the back of the class and snicker because the markets weren't even close to being efficient. I had found a place to stand in the bond pit where I could see a Dow Jones screen in the other room. And so back at those times, PPI and CPI, surprises would come out during the market, and I'd have an edge. I'd be able to trade 5 or 10 seconds before my competitors. My competitors in the pit basically thought the Federal Reserve was an Indian reservation in Wyoming. It was not a sophisticated bunch, but it was being in the pits was quite fun. Grown men yelling, kicking, screaming, and shoving and spitting. It was fabulous, and there were indeed edges and volatility like we're experiencing now. But I was strongly convinced that would go away. I was having dinner with Leo Melamed, who is a very famous guy in Chicago. He's the chairman of the Chicago Mercantile Exchange, and we were having dinner at Gene and Giorgetti's in Chicago, and I said, "Leo, your Chicago Mercantile Exchange is going to be a large, rather irregularly shaped museum." And he looked at me and said, "Not in my lifetime, Sonny. It's now the Chicago Board of Trade, where I used to trade, is now a golf pitching range." So the reason that you see guys like Jamie Dimon talking about Bitcoin is that he's talking his book. I think Jamie Dimon realizes deep down what I've been predicting for a long time, and that is banks will become as plentiful and as useful as Blockbuster video stores. They're going away. They're middlemen. This is not a good time to be a middleman. What's the difference between a venture capitalist and a travel agent? Anybody? Nothing. Nothing. They're both middlemen. I said this at Sand Hill on Friday. It did not go over well. One arranges a trip, one arranges a trade. They're both middlemen, and they're quickly going away, with or without digital currency, but digital currency is hastening that path. That's why this is such an interesting phenomenon. The first phenomenon that I know of, that this phenomenon is being led from the bottom up by all of us. Wall Street hasn't gotten it yet. There's a couple of firms like Fortress and a few banks that have saw it pretty early on, but Wall Street is not involved. That's why Bitcoin's going up, because they're just now starting to take their positions. There's one attorney told me last week there's 94 hedge funds in formation to buy digital currency. What are they going to buy? They're going to buy Bitcoin until they figure out the space, and that's why Bitcoin has a bid. Why is Ethereum soft? Ethereum is trading weak because all of these ICOs have Ethereum that they need to sell for payroll and expenses and to pay the bounties, which is another story. So the Bitcoin is a real macro scale. It's fun as a speculator to think about what could happen with Bitcoin, because Bitcoin could literally go to unimaginable levels, and the cool thing is you could still use it to buy a double decaf non-fat latte because it's infinitely divisible. And it's really a spectacular currency in that regard, but I'll let the smart guys chime in.
Oh, thank you. That was a great introduction. First off, I want to wish Bitcoin a happy birthday today. It's exactly 9 years since the white paper was released.
Wow. Are you Satoshi?
I'm not. I wish. He actually has a problem right now, though, because if he touches one of his coins, the whole thing could come tumbling down, temporarily at least. His reserves are so big that people sort of believe at this point that they'll never be touched, but they're worth tens of billions of dollars. So the white paper is released in the depths of the financial crisis. I spent a decade on Wall Street pricing both the lowest coupon high yield bond for a company that's now defunct called Forest Oil back in 2008 or end of 2007, 8, and then also the highest priced high yield bond in the beginning of 2009 for one of the gaming companies that shall go unnamed. So sort of that period of time at which Bitcoin was proposed was a tumultuous one within the capital markets. And later in my career, I sort of cleaned up the mess working for the Royal Bank of Scotland and their bad bank, which was tasked with post-bailout. The Queen of England gave a bad bank to a group of people and said, please help me sort out this mess. I don't know what we hold, I don't know what's here, and I'd like to understand. So what you kind of have in the banking system is a tree of money from retail people that flows up to the top and then gets invested and leveraged by very few smart people, and those people are purported to be the masters of the universe. So Bitcoin kind of came along and was a very different instrument. It was a democratizing way that you could buy into an alternative system or store of value or currency. And I think the main takeaway of everyone having tried to create an analogy for Bitcoin is that it's really anything to anybody. So in different countries, it means something different to those people. Here in the US, there are now sort of traditional markets. The CME announced this morning that they're going to launch futures on Bitcoin. It's becoming accepted in a more mainstream ways, but I still argue that if we slow that acceptance down, it'll actually have a better long-term future. There's still a lot of issues with the technology, with the teams behind the technology. They announced that there's going to be futures today, but I don't know which fork they're going to hold or which one that future would point to, and so there are tremendous amount of issues with too much money flooding into this space too early. Now with things like Bitcoin, this is a simple asset with a simple use case, and then we also discuss things like Ethereum, which I'll talk about after I let everyone give introductions. But to sort of summarize, I made the transition into this space because I saw a lot of these challenges at the firms I worked at, where there were too few people making decisions that were too big, and they didn't necessarily understand the details of what they were doing. I sort of saw a world where kind of democratizing finance, things like AngelList, getting people involved in projects and helping to sort of bootstrap those projects by turning your customers into owners as well, was a very powerful concept. And I sort of initiated this concept around what happens if you owned an airline that was owned by the community and not by a for-profit company. So when you strip out investors and you strip out profit being pulled from a network, you can actually deliver either a better service, meaning for the same price of flying JetBlue, you could get twice as much legroom, or you could deliver a lower cost. So, I think the role of middlemen is changing more than it is going away. There's still going to be businesses that are going to be run at sort of minimal margin. And when you think of Amazon, what you see with Amazon is a business and a service that no one can get away from because it's built this huge network effect. It's delivering the lowest cost. They're still a middleman, but the role of how they operate is becoming more programmatic. That's what I think is interesting, is not, middlemen will not go away. When we think about the evolution of the crypto space and what ICOs have become, we've actually gone 2 steps forward and 1 step backward. Meaning, at first, people were actually funding decentralized smart contracts. They were doing so anonymously. The funds were being pooled and used, and those tokens they would buy would represent an interest in that network. Now we're seeing, to fit back into the regulatory framework, and I'm not saying that this is for better or worse, you're seeing middlemen reintroduced into the system. In regions like China, they actually prefer to have someone who manages the syndication of their investment. In the US here now, we have platforms that are going to be built off AngelList, platforms that are going to be built around helping execute, fundraising in this space. So, we're almost reintroducing the middleman. And it's going to be important going forward to understand, especially for tokens that are going to power networks, sort of how those, who's earning what from these from the launch of these new networks. So I'll probably discuss a lot more, but I don't want to take too long for Mitchell introduce himself.
Take as much time as you want. Let's see. I don't know. Is it on? Yeah. Okay. Mitch Manoff. My company is Corinthian Partners. We're an investment banking asset management firm. We made payroll for 21 years, so that's a heck of a lot better than the 14 years I spent at Lehman Brothers, who are no longer making payroll. Or for that matter, the firm I was with before, Drexel, which is no longer making payroll. Or the company that I was with before that, which was Merrill Lynch, who are making payroll, but they're referred to as Bank America. So either I am the most unluckiest person in the world, or there is something going on. And what I do see here is the whole concept of this time it's different. No, it's not different. This is very, very similar to what happened 20 years ago, 18 years ago, 19 years ago with the internet? Was it a bubble? Well, obviously it did have its ups and downs, but there certainly were huge values that are created. Everyone who owns a single company that uses an internet protocol certainly realizes that there was a lot of value. Yet there is a lot of companies who did not have a real business plan. Their business was not solving a solution. Their business was just starting something to make a dollar, and we hope we get a business plan later on. And those are things that I must say I have as wallpaper with some of the companies that didn't work out. But at the end of the day, one of the great things in life is you get a second chance. And you truly get a second chance to try to figure out how you could solve a problem with these types of companies. Now, my friend Brad asked how many people bought various coins and things like that. I'm going to ask an easier question. How many people saw The Godfather 1? Virtually everyone. How many people saw The Godfather 2? Just about everyone. Well, the whole concept here about capital markets without middlemen. If you remember in Godfather 2, a young Vito Corleone was in a position where he was being shaken down by a local don called Finucci, okay? He was being shaken down, and Finucci said, "I just want to wet my beak." Now, his definition of wetting the beak was taking a significant cut of young Vito Corleone's profits on his legal or illegal operations. So, and I won't give you a spoiler alert to the 3 people who didn't see Godfather 2, but he took care of his middlemen. Now, by no means am I suggesting that we go out and we do what Vito Corleone did. But what we need to do is figure out, and in large measure, that's what blockchain does, how we can be cutting down the middleman to an acceptable level to the extent that they are providing value. I teach venture finance, and I have been for the last 10 years over at Baruch, and I love every minute of it. And one of the biggest things that I say is, what value are you providing? If you're providing a value, you have the potential of having a business. If you're not providing value, then you don't have a business. Or, as Peter Drucker said, probably the greatest business writer on the planet, he said, he would ask, what is the definition of business? What is the goal of business, rather? Well, the goal of business is not to make a profit, but the goal of business is to create a customer. And one of the great things about an ICO that is properly done is that it's going out to be able to create a customer. That's one of the things that we're trying to do here. One of the things we try to do at Corinthian Partners, we have a mission statement, and sometimes we keep to it, sometimes we don't. But it basically says we solve problems using securities, insurance, and providing advice. 9 words, mission statements typically 10. We under-promise, over-deliver, sometimes the other way around. But the fact of the matter is, that's what I'm seeing here. There's an entire ecosystem that is building up. And the exciting thing about being involved in some of these companies, I am on the board of advisors of 2 companies, Latoken, which I'm very proud, fabulous management, fabulous solving problems, and SportsCoin, which I just joined recently, which is a really cool company. What I am looking at here is an entire situation where you could be solving problems, providing, in my particular case, liquidity for illiquid assets. Now, one of the things that Brad said, he spoke about some of the larger companies, larger banks not getting it. And at the top level, at the C level, I happen to agree with that. But if you looked at the Fortune magazine article, the September 1st issue, it was titled Blockchain. And it gave a pretty balanced story. It talked about some of the issues that you have with bad guys coming in there, and it talked about some of the great things that are being done. But they ended up focusing on a young lady and her department and what that company was doing in the blockchain area. Now, what company was she working for? JP Morgan. So you have someone at the top saying certain things are frauds. You have someone who is being focused. Their entire division is being focused, and they're being compensated a lot of money because JP Morgan does pay their people very well. And the top doesn't know what the bottom is looking for. One of the great things about being in front of a group like this is that everyone here in this room gets it. Everyone here wants to be involved with something that is going out, that's going to be, as we're supposed to be saying here, capital markets without middlemen. They're trying to do this better. Now, what inning are we in here? I think we're in the second inning of a game. However, the innings are going very quickly. It's a game that has 2 outs aside and 2 strikes and you're out. Foul balls are considered strikes on that. No unlimited number of foul balls here. So you're in a situation here where everyone here has an advantage. Some of you know a heck of a lot more of tech than others, but some of those other people know about marketing. Other people have other skill sets. The bottom line is, for us to be talking about how it's going to be working out in the regulatory standard is very important. But that's something I think we need to coordinate with the lawyers. The thing that we should be doing is figuring out how we could put together terrific companies, make terrific products, and be able to solve a lot of problems. And if we do that, we get that right, we're all going to be very successful. Thank you very much.
So I'm Debbie Hoffman, and I'm going to take right off there. There was a piece that you just mentioned at the end and what's missing. So let me just tell you indulge me for a quick story before I tell you where I fit into this piece. So this summer I was in Hawaii, and I took a trip. It was a long tour around the island. And in his Hawaiian accent, the tour guide kept saying, and the lawyers, and the lawyers, and the lawyers. And I was so impressed, because what do you think I am? So I'm a lawyer. But then, at the end of the tour, I realized that he was talking about the warriors. So I'm a lawyer, but he was talking about the warriors the whole time, and how they battled on the island and did. So the role of a lawyer here is what's interesting. We're talking about middlemen. And a lot of times when you think of a lawyer, you might even think of a lawyer or a banker or something like that as a middleman. But in this particular case, the lawyer is actually not the middleman. If we structure these deals properly, the lawyer will help you, will be your ally at the beginning of the transaction. You'll start looking at all of your issues up front. You'll look at the SEC, you'll look at broker-dealer issues, you'll vet through all these things, and you'll determine, what do I need to look at, and what do I not need to look at to determine my success in my launch? And how do I want to structure this? Do I want to do staffed? How else do I want to, and other ways to do it? So you want to properly evaluate all these things so that when you go out, when you launch, that middleman, there isn't going to be a need. There isn't going to be a need for a regulator, or if you do have a regulator, they're looking at it right, transparency through the chain, but you're not interrupting your deal flow because you've set this up properly. So that's really all. I'll give you a little background about who I am in terms of, so I practiced here on Wall Street law firm in the capital markets in lending for quite a bit, and then I got an in-house doing digital lending, and I've been working in digital lending and lending in the last, basically my whole career as a lawyer. And so in digital lending, we saw the transformation of companies that kind of fought it at the beginning and then eventually realized that, hey, there's a way to do this, to work up front, because in digital lending there's a lot of regulatory obstacles, unlike what we have here yet. But the companies that have been and are succeeding digital lenders in lending are those that are either partnering with companies that have had a long existence in understanding regulations, or those that are innovative and structure their deals up front to be ahead of the curve of what might come down the pipe later on from regulators.
Thanks a lot. Because I'm actually doing the platform which is decentralizing capital markets, I would summarize what I see could be where middlemen could be removed. There are three big things which are involved in a lot of middlemen. First is infrastructure things. It's like custody, it's about clearing, it's about banking transactional system. It is all in one blockchain, Ethereum. They have all of it inside one blockchain. Second big part is about investment decisions. And third part is about lending decisions. So, how we can decentralize investment decisions? So, it's not only big firms dominate this investment space, but perhaps millions of people making smart investment decisions. There is a social following, for example, the new era of social investing, when there is a trader who is making good return, and then other people analyze this trader, analyze why he's doing good return, and follow him. So I think that sometime in the future you will see who of your friends in Facebook are doing good returns, and you also know this person and understand how he thinks. You trust him, and so you can follow his portfolio. And also because you don't need a lot of infrastructure, you don't need to set up a hedge fund by investing several thousand dollars into infrastructure. You don't need to spend a year with your relative to fundraise for your fund. You just start your account, you do good return, you get followers, and actually this is like a fund manager. So any person who will have an ideas how the world works, which regions, which technologies, which companies will perform better, he can go and trade and get followers and get influence. He will move money across the globe without huge cost of creating hedge fund infrastructure, proving that he has the right pedigree, and so on. So I think that this will involve far many people into investment, into making smart decisions, into analysis of the future of the global economy. And this will make money flow smarter.
Well, I hate to break it to you, but lawyers are next. As soon as we're finished disintermediating the banks, the investment banks, the venture capitalists, we're coming after lawyers. Take a look at a project that's coming out of Consensus called One Law. Has anybody heard of that? What's that? This is a fascinating prospect. They're basically digitizing and containerizing in smart contracts, who would have thought, and replacing the cost, increasing the speed of a contractual commitment, and it's going to be absolutely fabulous. It's early stage, it's just beginning, but I like to say lawyers are like beavers. They swim into the mainstream and dam it up. My favorite Wall Street attorney story, I just got to share this with you. I'm still laughing at this 20 years later. I was having cocktails with a Wall Street attorney, and he was talking about a deal that he was working on. And I said, wait a minute, isn't that a conflict of interest? He looked at me and winked and said, no conflict, no interest.
I do want to highlight one thing, though, as we think about blockchain as kind of this efficiency technology and structuring things correctly, and what are we investing in here? And there's sort of a big distinction between something where you actually have ownership underlying it, that you're layering in a token to sort of securitize it. There's actually many reasons why, I don't want to scare you, but why that whole market actually may not want blockchain. And the reason for that is transaction finality. So if my name can be on a cap table, I don't know that I would want to hold a token that can be stolen from me. I would just want my name on that cap table. Yes, I would want it to be transferable, and I would want the properties of liquidity, but that can be handled in a centralized setting. So the things where blockchain gets interesting are, like, how many people here know Ripple and Bitcoin? Or sorry, Ripple and Ether? How many people are interested in Ether? And is the same number interested in Ripple? By and large, okay. So these are like two very distinct markets, though, that I just wanted to make sure we think about when we think about, you know, things like Bitcoin and Ethereum and sort of what that technology and those networks purport to do, is to actually pre-program all the incentives and all the settlement versus, and maybe have a lawyer, you know, help get them off the ground. But the long-term vision is for a decentralized network that actually benefits from being decentralized versus adding liquidity, which is another part of the market.
You guys are capital markets guys, so you probably be thinking probabilities a little bit. So if I could ask you, over the next 10 years, what probability do you think the U.S. central bank will adopt a cryptocurrency that they prefer? And what percent chance do you think that that's going to be Bitcoin, given the technical limitations of the technology? And what does that mean for the long-term prospects of the Bitcoin USD exchange rate?
Let me try that. I don't think anyone knows the answer, but I will bet anyone any amount of money that there will be, out of the 198 countries that are part of the UN, there will be a fair amount of countries that would be adopting that in the next 2 years, okay? Should Zimbabwe, with a $1 trillion bill, have a currency? Well, you know, I don't think so. Would the volatility on Bitcoins be any worse? Now, it's obviously been net up, so it's not bad at all. How would that relate to the Venezuelan debacle there, where you have basically no currency there that's of any value from day to day? I would be venturing to say that if Venezuela moved to the Bitcoin protocol, you would be in a situation where it would be a heck of a lot better. And then you start going up the scale. Would it be the United States, perhaps in certain, areas in certain parts of business, perhaps in trade with Zimbabwe or someone else? But I will be assuring you it would be in some of those places, and it would work itself up with that. There's no question about it. I mean, the subject matter here is capital markets without middlemen. The possibility of saving 1 BIP, or even less than a BIP, is one of those things that help Vanguard, among other things, become such an incredible place to be capturing money, because they were the cheapest cost place around. And they provided something. They said, we're going to do as well or as poorly as the index, but we're not going to do actively managed accounts. So I'd like to be able to say that there would be something within 10 years, but I know there would be something within 2 years, perhaps not in the US.
So let me hit on that as well. Obviously, there's never been a currency that worked. There's been 600 currencies come and go. Probably the number's probably a lot larger than that. If there is going to be a currency that works, it ain't going to be the US dollar. There was an old adage on Wall Street when I learned to trade that markets have a perverse tendency to move quickly in a direction that hurts the most people. You ever heard that?
Yeah.
I figured out what that trade is. There is one trade, should it occur, has such frightening consequences. The only thing that I can think of that's worse would be a meteor strike on the planet. What's that? That would be a near instantaneous loss of reserve currency status of the US dollar. I know it sounds crazy, and by instantaneous, I mean, I believe that this is something that could happen in a matter of quarters rather than decades. Something has changed in our lifetime that never changed before. The unit of time in our lifetime has gone. So would a government issued digital currency work? Nope, not unless there's limited supply. The reason Bitcoin is flying is because there is limited supply. It's not 16 million, it's actually less than that. because a lot of Bitcoin has been lost. Anybody in the audience lost a Bitcoin? The reason Bitcoin is relatively easy to trade is that you don't have to measure supply and demand. You have to measure demand because you know what the supply is, except for those coins that are being lost. Governments will never be able to restrain themselves from printing. Once they have the ability to print the currency, they can't resist. The dollar has gone down 96% of its value in my lifetime, and I'm still young.
I sort of wholeheartedly agree that these governments will never adopt Bitcoin, and really Bitcoin should never be adopted by a government. The whole point is that stays outside of the clutches of these types of institutions that I don't know yet if Bitcoin can actually withstand something like the dollar can and use monetary policy to adjust. But in the long run, I do agree those are for short-term shocks, right, and crises. And in the long term, I actually think that Bitcoin is better off as a pre-programmed sort of inflation rate, but also as an alternative to our traditional financial system. So we see things like the IMF, considering Bitcoin or virtual currency as part of I think it's the ADR basket, which is, sort of helps to stabilize, underlying financial instruments. Those things could be interesting. The governments, if they were really smart, would probably buy virtual currencies and stick them down in Fort Knox, because what's really going to happen is when there's more adoption of these things, it's actually going to continue to debase traditional currency in meaningful ways. So countries will actually go down if they can't regain control of their own, currency and use it to pay their governments, and they don't have access to print it. So that will be the catastrophic effect of this being adopted by too many things. And the best way to hedge against that for governments would just be to buy some.
Back to Wall Street for a second. I just want to point out firms like Law Token have a big impact on Wall Street as any other ICO that I can think of. As you all know now, when you trade a stock, there's something called T+3. That means trade plus 3 days before you're able to get your money. With digital currencies, it's going to be T+3 milliseconds. Because in digital currency, the trade and the clear are the same transaction, which is problematic if you're a clearing corporation, a transfer agent. All those people are middlemen and unnecessary and going away. The exciting thing about La Token is that the Empire State Building is going to be tokenized. Not that they're working on it now, but it will be tokenized. You'll buy 1% of the Empire State Building. You'll see it in a wallet along with your other real estate holdings. If you want to hypothecate that, you hit a button and you can instantly take a loan on that property. You'll be credited daily with 1% of the rent rolls minus expenses as it comes in. And if you want to sell that property, it's T+3 milliseconds. So it changes the way, it changes everything. And what will promptly cause Wall Street to figure this out is when they do the math and figure out they could save between $200 and $400 billion a year in just wasted transaction clearing fails and so forth. One interesting project also that you should keep in mind is a project called T0. It's a subsidiary of Overstock. Patrick Byrne was the first to accept Bitcoin in his online retailer. He has constantly been at war with Wall Street because of naked shorting, and it is filled with fraud. People will short stocks. They say they have them. They say they're going to borrow them, but they never deliver them. He is now putting this all on the blockchain, and Wall Street ain't going to like that very much. If I was Patrick Byrne, I'd have a food taster.
I would say one other thing that goes on is that Wall Street's pretty smart. They do try to figure out ways of taking advantage of all the things that we've been talking about. I happen to believe that you will be seeing a number of companies that are doing ICOs who will be for lack of a better word, merging, partnering, licensing agreements with public companies so they could be able to get the money they need to be doing the ICO and then being part of a publicly traded company. So if you want to talk about something that's a public-private type of relationship, I think that's one of the things you're going to be seeing. And people could talk to me later on because it is a much more complex story, but it is something you will be reading a lot about in the very near future. I think you have to go.
Yeah, I want to take a step back from it because from what I see, I speak to a lot of corporate counsel and all kinds of companies, Wall Street, banks. And so one of the things that we're sort of missing in this room is that in this room we all understand ICO, blockchain, we get where it's going, we understand, we know that Wall Street is going to be there. I think what we don't understand is the whole concept of blockchain and what ICOs are built on are foreign to a lot of people. So in order for this to be propelled forward, first you have to make sure that the banks and their infrastructure are understanding what blockchain is. And believe it or not, there are a lot of people that you sit on boards, you know there's a lot of people that still scratch their heads and don't even understand that. And then you have to take the leap to get to what electronic currency is so I'm not trying to say that we don't have sophisticated business people, but there are a lot of people that still don't get this. So you have to account for that in time. And to answer your question, I think it had to go about government and so when you think about what governments are going to be able to use electronic currency, just also take a step back to blockchain. And the only government well, not the only, there's a few that are embracing it right now, but Dubai, way ahead of the currency, they're in, no pun, but by 2021, they want to have their entire government on blockchain. So that's just blockchain. Let's talk about currency and then making the jump to that and government after that.
Thanks a lot. Thank you.
Great being with you guys.